Hey, what's going on, YouTube? Welcome back to the channel where we're talking land wholesaling, new construction, and private lending, and how all of that ties into you becoming a successful developer or a successful land wholesaler. And in today's video, what I want to discuss is going to be term sheets. Yes, when you're talking to lenders, trying to get quotes, whether it's going to be a fix and flip, a DSCR, or in our case, we focus on new construction. What you're going to do is reach out to the lender, give them the scope of work, what the deal looks like, and then give them an idea of who the borrower is. And in exchange, they will give you a term sheet that's going to have the interest rate on there. It's going to have the loan amount, the time period for the loan, along with your origination, your LTC, LTV, LTARV, and ultimately what the numbers are, right? What's the liquidity going to be required to be shown across brokerage accounts, across business bank accounts and personal accounts, and as well as what the cash to close is going to be, if any, for the loans. So let's just jump right into it. This is a deal that came in from a broker of mine. As you can see, here's the address here. This is a fix and flip deal in Broken Arrow, Oklahoma. Typically, when I'm building networks with brokers, there's a format that I like the deals to come into that's going to answer every question that I need. And if you want that format for free, it's going to come in a little sheet. You can just email me. I may put a link in the bio or something like that just for you to download, for you to have. But we can kind of go through this and then I'll kind of let you know how. So pretty much you see here, this is going to be, what type of deal is this, first and foremost? Is this going to be a purchase or a refi, right? So for 9 times out of 10 for fix and flips, they're going to be purchases. These investors, fix and flippers may have these deals under contract already. They may have earnest money put down already, and now they just need the lender to come in and to finance, right? So this is going to be a purchase. What type of deal? So in the case of like a new construction deal, a lot of times those are going to be refinances. So here it's going to say refi and then new construction, because 9 times out of 10, the builders are going to buy the land themselves. And when I say builders, I mean like if these are infill lots, right? We're talking 4,000 square foot to maybe 15,000 square foot. When you're talking about acreages and stuff like that, a lot of times builders, what they'll do is they'll put a percentage of the money down to buy the land. So there may still be a payoff. And then when they're ready to go vertical, then they'll come and get the money. But 9 times out of 10, like they put their percentage down, right? So if it's like a 60%, say for $10 million, there's a 500 acres for 10 million, right? 60% leverage on that. So the lender is going to come in with 6 million. The builder needs to come with 4 million. So they put the 4 million down, and then they spend their own money to do all the soft cost stuff, right? Clearing out, parceling out the lots. And now they spent that money, right? So they put 4 million, and let's say it cost another million to go in and do all that soft cost. So they're in the deal 5 million. Now they've done that, they've increased the value of the land. So when they go to get their construction loan, 9 times out of 10, they'll be coming with zero money out of pocket. So just for nuance for you to understand that. So here we go. Purchase. The type of deal is a fix and flip. Obviously, you want to get the address. The address is here. And then after that, you want to see, okay, you have the type of deal that it is. It's a purchase. You have a fix and flip. That's the strategy. And then you want to get the purchase price. So we have the purchase price here, $232. The rehab budget, $87,500. And then the expected ARV of $550. Now that's the deal, right? That's going to be the deal part. So when you're trying to get private money, their private money lenders are going to underwrite the deal, and then they're going to underwrite the borrower. So now that we got the scope of work for the deal, now let's look at the borrower. So the borrower has a 790 FICO, love it. They've done 5 deals over the last 3 years, so 1, 2 deals a year. Okay, not bad. They're liquid $93,000. They own their primary home, and you can see the exit strategy here is to flip. Okay, I have everything that I need. So I take this information, I correct it, put it in the format that I like. that, because the thing is, you want to be able to tell the story. That's going to have you get the terms quickly. Because what you don't want to happen is you don't have enough information to get the term sheet, and then you have to keep reaching back out to the broker, and the broker has to reach out to the client. You want to basically, you want everything in one concise email. You don't want to have to go back and forth. Like, you don't want to leave out the FICO, then have to go find out the FICO, then figure out, oh, wow, is this a fix and flip or is it new construction? Then you can figure out, well, how many deals has the person done? Because that stuff matters when you're getting your terms. So, and this right here is what you can add to your resume when you're wholesaling land. I don't really have a new construction, to show you. So I want to go ahead and show you this. But if you're a wholesaler and you're looking at land, right, and you find a land deal and you talk to the builder, as you're talking to those builders, you can let them know, and this is even before you have a deal under contract. When you're talking about where's your buy box, where do you buy at? Now comes the conversation of, who do you use for funding? Are you using bank financing? Are you funding these deals yourself? Do you have a pocket of investors who you use, or do you use private money? And if they say private money, then you can kind of go into asking, like, on your last deal, right? Your last 2-3 deals, who did you use? Did you use one private lender? Did you use a couple? Okay, what are the terms looking like? Were you about 10.25 interest rate? Were you about 1.5%, 2% origination? What was the leverage that they gave you? Were you at 80, 85, 90? Have those conversations, right? They take you a little bit more seriously, and then ask, I do offer those services as well. On top of finding land for builders in these markets, I also assist with getting, the best financing for their business and for how their business is structured. And then boom, take them down the rabbit hole there. So just kind of want to show you this right here. We're going to get into next is going to be, we're going to take a look at 2 term sheets. Okay. So this is what you do. Like, this is, I'm showing you this stuff verbatim, like, get these terms from this is the broker. And then what you'll do is you'll pull up these term sheets. Okay. So I have 2 term sheets. I'm going to go ahead and share my screen right now. So this first term sheet, this is from RBI Private Lending. So you can see here, this is pretty much what they're going to sign if they agree to the terms. And then you see here a list of, like, what the requirements are, the initial requirements. Okay. So if we're taking a look at this term sheet, let's say you're a builder, you're a fix and flipper or whatever. You're going to obviously, you have the property information, you have the purchase price here, you have the rehab budget here. After repair, I know it said $550 on the email. And $470 here. I went ahead because I'm sure you saw this came in a couple of days ago. I ran some comps, so I didn't see any $550. So I just went ahead with $470, and this is kind of top of the market too. So yeah, that's the reason why, if anybody's wondering. So you can see here the LTC and the LTV. This LARV is loan to after repair value. That's what that says. The LTC is loan to cost. So we're at 90% loan to cost, which is great. And then you can see here, in terms of the origination, we're at 1.25%, and they're at 9.5% interest rate. And this is going to be a 12-month loan. Okay, interest only, non-Dutch. So non-Dutch, what that means is you're only paying interest on what you use. So you can see here that we have a budget of $87,500, right? This is within the loan. Let's say the flipper overestimated and he only needed $50,000, right? Even if you have the loan for the $87,500, but you only use the $50,000 to complete and exit your project, you're only paying on $50,000. You're not paying on the whole $87,500. So that's what non-Dutch, interest only non-Dutch. And you're only paying interest on what you use. So this is all kind of estimated outside of what the origination is going to be. So no need to kind of take this super seriously, but they have an estimate for legal, appraisal, the broker fee. The broker's charging 3%, and so as you kind of come down here, let's say the loan amount. So you see the total loan amount is $287,550. The initial loan is $200,000. So that's going to be the initial is funded day one. And then there's a holdback of the budget, which is 87.5, and that rehab budget is going to be drawn down on as the project keeps going on and on and on. So it may be 3 draws, it may be 5, it may be 2. It's just kind of dependent on that particular borrower. Then you see the down payment here. And then you see if you come down here, the liquidity required is 63,742. So this is what's going to be shown within certain bank accounts that you have. So if you have brokerage accounts like a 401k, stock account, they'll take like 60-70% of that value. And if you have a business account and also a personal account, they'll take that. It just needs to add up to 63,742. If you have a business account that has 65 grand in it, you're good to go. This is not what you're spending. This is just, you need to be able to show this in your account. And then this is the cash to close right here. So as you can see here, this is going to be comprised of your closing cost and your down payment. Okay. So if we were just to kind of do some quick math, just for number's sake, all you're going to do is you're going to take the 31,950, add that to 18,132.92. You have $50,083.92. So as you can, I'm not sure if you can see it, but that's what you have here. So this is what you're going to need to close this loan. Okay. So, all right. So we have 9.5. So we're kind of comparing. Okay. Obviously, there's some questions that you're going to need to ask, but for time's sake, I might do another video to to go dive deeper in this. But today, I just want to show you how to look at a term sheet and compare it to other term sheets. And you do this repeatedly, and you'd be surprised how much revenue this can add to your land wholesaling business, operating as a broker. Just being like, especially white glove, taking a white glove approach, to some of your clients who consistently buy deals from you. That way you can have everything vertically streamlined. Everything's in-house. You get the land under contract. You're direct to seller. You're direct to builder. You're direct to lenders. You're direct to the builder. Boom. So you can, instead of, you can just do maybe two deals a month at 5,000 assignment fees each deal, right? And then that same month or that following month, that same deal that you just did, you can charge, a fee on. Because if we were looking at, if this broker's charging 3%, right? For you to get an idea, they're charging 3%. The total loan amount you can see right here is 287,550. So 287 times 0.3%, that's $8,626.50. Right? 287 and 3% of that. Okay. So can you imagine this is just one loan, right? So let's just say you have you made a $5,000 assignment fee, right? And the following month, the builder's ready to go vertical. So during that time period that they're doing the soft costs, you're getting all the required dots from them. Okay. So you just just say you did something like this, and you add the 5,000 to the 8, I mean, that's the 13, essentially almost 15 grand that you've gotten on one deal, just because now you've expanded your knowledge and now you know the workings of being a builder, right? On top. So you know how to price the land, you know what they're looking for, you know what the frontage needs to be, you know how to review title commitments, you know how to take a look at a survey. Now, outside of that, you know how to look at loan terms and compare loan terms. So now at that point, you're just asking your builders, like, what's the most important thing to you? Interest rate? Are you're looking at interest rate? Are you looking at leverage, close time, draw process? Like, what's the most important thing to you when you're dealing with private lending companies, right? So this is the first term sheet, okay? Now we can kind of go down a step further about, this is what's required. So let's go ahead and go into this. You need an ID or driver's license. So if they're a foreign national, because a lot of private lenders work with foreign nationals, they'll need like a passport. You just signature, here's the term sheet, so they need to sign it. that obviously you need to do an application. Your entity docs are going to include your IRS EIN number, your certificate of filing, your certificate of formation. You should be fine. And then if you have like a corporation, send those corporation docs. Bank statement, business and personal, I would send whatever. If it's new construction, it'll be a construction budget, usually with a 5% contingency. And if there's a renovation budget, usually that's going to be 10, maybe 15% contingency. And make sure that's in Excel format. Okay. A track record or a schedule of real estate owned. This is going to show the properties that they have flipped or they built over the last 3 years. And it needs to match the LLC that they're getting the loan with. If they've done some deals through different LLCs, they need to send, like if it's ABC 123 LLC for one property, but they own that LLC, they'll need to send the docs in for that. And it's like some people use different LLCs for every property, some don't. So you need to make sure that their name matches the LLC matches the property, and they need to have entered into a loan and exited. Or if they refinance this a long term, it needs to show that. That's experience. It does not matter if you have worked as a contractor for 25 years, you know the business. Lenders do not look at that as experience. Experience is you taking your pen, you signed on a loan as a guarantor. So if you sign on a construction loan, you made your draws, you paid your interest only payments on time, you got the property listed, it sold, you exited. You paid the lender back, you made your profit. Same goes for fix and flips. That is what experience is. It's not I worked as a contractor or I worked as a subcontractor for many, many, many years. That's not experience. Okay, so and then obviously we'll look at a purchase contract, right? You have the property under contract. I need to see the contract. If you own the property already, show me the settlement statement or a deed, or the same thing as a HUD. And then if it's a construction, show me the plans. I need the architectural plans and elevations. If you have approved permits, send in the permits. Then your general liability insurance and your builder's risk insurance. And if you're in a market, especially like a Florida, your flood insurance. Okay, so let me go ahead and stop sharing. So let me show you another term sheet. I'm not going to take too much of your time. Like I said, I just want to give you this information to really teach you how to be competitive in this market and give you the real. That's my goal, to be on here, put these videos. I do these videos for you because this information people charge thousands of dollars for. And while we're on that topic, if you want to learn land wholesaling, you want to get a grip on this business, I have a one-time payment of $97. Of course, it's $97. I'll send you the documents that you need. You'll have access to the private group me. You'll be able to email me. And like, if you're a hustler and you just need your hand held a little bit, but you're not scared to hop on the phones, you have some grit and you want to make some money, like I said, you don't have to be doing 50 deals a month, 10 deals a month. If you just do one deal at $5,000 a month, that's extra $60,000. And that's just one deal. Like, focus on closing one deal a month, $5,000 a month. That's 60 grand. Now, if you want to go above and beyond, you know what I mean, and 10 grand a month, cool. But I mean, you're going to have to get on the phone. You got to start somewhere. That's the only way you're going to be successful. So let me go ahead and show you the second term sheet. This is from Park Place Finance. You can see here the date. I mean, today is the 11th, so this is yesterday. Here's same deal, right? So here's the information on the deal, 12-month interest only. So their interest rate, they're at 10.49. So they're a full 100 basis points above what the other term sheet says. So this is just right off a rip. I know the other lenders doing 9.5. These people are doing 10.49, essentially 10.5. Okay, so then you take a look at, let's look at what their LTC is. LTC, same thing, 90%. You see here, they have to bring total cash from borrower, cash, so 48 grand to closing. That's what they're bringing. They're bringing 48 grand to closing. 3%. So you see the 3% broker fee. His fee's the same, pretty much. 1.5 origination. I believe the other term sheet was 1.25. So you can see here, that's why I say it's important to ask, right? So if you have, so for this instance, it's like, all right, if rate's the most important thing to you, right? And like the only thing that's different essentially between these terms is going to be the 100 basis points. Now you kind of dive deeper into asking, okay, what's the draw process like? How long do draws take once requested? Uh, some companies require a physical inspection, so they'll schedule somebody to come out and do the inspection. Some you can download the app and take your own pictures, and that goes for new construction and fix and flip. And you can upload it to the portal, and then they'll have their internal team take a look at it, and then funds will be dispersed 24, 48. There's some firms out there like they can take 5 days, sometimes 7 days. I've heard horror stories about it. I've actually gotten clients from different lenders, construction clients who, based on that, like you can't, as a lender, you can't take 5 days, 7 days to disperse draw funds on a construction project. Because can you imagine losing a week to 2 weeks? So that eats up. So you take a look at this term sheet. You're like everything kind of looks the same. The LTC is at 90. It's at 1.5. So it's a matter of, okay, who do you trust, right? Because if you're just going to shop lenders, like, hey, can you, like some clients, or not clients, but some people, they'll take this term sheet and they'll send it to another lender and say, hey, can you beat these terms? Like I don't, you shouldn't want to build relationships with lenders like that. So if it was me, I would just send an email, blind CC all the other lenders, and you just say, let them know, like, or hey, I'm looking to get financing on this particular deal. I have some other lenders looking at it. Based on these, can you please give me, your highest and best terms? And once they send you this, at this point, it's just you sitting down, reading through these docs, right? And then sending it to your client and letting them know the different little nuances for each different lender. And you can charge, like, you can be the one charging a broker fee of 3% and making $8,600 on this deal. And the thing is, you get paid at closing. You don't get paid when they build or finish the flip, right? As soon as the loan closes, you get paid. So you see here, typically on a fix and flip loan, this will close in like a week if the borrower is getting you the docs in a timely manner, 10 days max. So how many of these do you think you can do? You can spend some of your time calling sellers for land deals, right? Getting them under contract, wholesaling the land, and you can spend the other part of your time trying to get in front of investors to see if you can broker deals for them. With that being said, if you like the channel, please do me a favor and subscribe to the channel. Like, share, help me grow, help me get in front of people who are interested and want to make some extra money, maybe want a career change. This could definitely help you out. And also, do me a favor, please comment what you want to know. What about land wholesaling is scaring you? What are you failing at? What do you think you can improve? However I can help you, put it in the comment section. If you have specific questions about new construction, right? The permitting process, putting together a budget, hiring architects, looking at architectural plans and elevations, all that stuff, put the comments in the comment section. And then with the private lending aspect, if you have a deal right now, or somebody who's looking to get terms, who may be interested in something, like alternative lending, shoot me an email, drop your email in the comments, let me know, and let's connect. This is a different way for us to network. And so, we're 9 times out of 10, you're only going to be as successful as the people you have around you in your circle. So one of the goals with this channel is I want to build an active community of deal swapping, right? I want everybody to be working together, trying to get deals done. So with that being said, let's go close some deals.